Hello and welcome again to another video on REITs by reitspro.com. This is Gaurav Jain, and today we'll be discussing if REITs in India can go bankrupt, can they go bust. The first problem that you've all seen today is that all REITs have tanked majorly for the past 1 year. So in the past 1 year, this is how Embassy has fared, as you can see on the screen, and quickly I'll go through what Brookfield's been through, and similarly you can see how it's been for Mindspace also. All the three office REITs, the fourth one is the Nexus, which is the recent listing only. So the three REITs have really done badly in the past 1 year. So why has this happened? I've already discussed this in the past videos, especially the one on how the lower incomes ahead for Embassy REITs. That's where a lot of factors are outlined. And to brief on what we had discussed in that video, the first reason was vacancy because of work from home or because of SEZ problems that we discussed in that video. Secondly, the fact that escalation rents have been slow because of the slowdown, the global slowdown that we are all anticipating. And the third is the interest rate impact, because the interest rates have been rising world over. So REITs have an inverse relationship, as historically people have seen, at least in the short run. So what has been the global impact? The globally REITs have really gone down. If you see in the last line here, the office space REITs have real estate has gone down the most in this case. So if you see here, it's about 14.7%, and this is an April 2023 data. And if we feel that REITs value is not going to be anything, it's going to be nil, then we should not be talking about REITs. So what is our take on that? Let's discuss that. So Indian REITs is equal to zero. Is that technically possible? Yes. Theoretically, yes, it's possible, but practically things look pretty difficult. And why? Let's go through those reasons why one by one. So let's say now what happens is that REITs holds properties and rents on that are generated, and when MNCs are the ones who take them, and when they exit, then REIT continues to hold the property. So what in this whole equation, what do we have here? That we need to assess the cash flows and the balance sheets. So here, when this scenario pans out, that REITs hold properties, they rent, and MNCs exit, and the REIT still holds properties, there is a possibility that because of lower demand, cash flows or renegotiations make lower DPUs happen. But what about the balance sheet? As you've seen, the balance sheet has real estate. That's the real thing that's a little different from other corporations. It's got a plenty of real estate underneath in the balance sheet. So that remains as such. What would probably happen in this scenario is that if there is a lower market by the renters and the scenario overall is not that great, then what's going to happen is that the cash flows will decrease and lower DPUs would be given to the unit holders. So you'll have lower earnings. Obviously the price of the REIT would change because of lower earnings. But if you see the balance sheet, there will be no impact of this vacancies and the fact that the tenants are moving. Obviously there will be a difference in valuation for some time, but the real estate underneath would still be there. And we've all seen that in the past few months, India has had a rising real estate market. So obviously the balance sheet as such has a stronger position if you were to look at the real value of the assets, if they, let's say, about the liquidation aspect of the assets. Now REIT properties, there are also the plus point here is that in REITs we have limited asset availability for renters in the near future, and because REITs have a grade asset composition, and there is a very low competition with non-REITs and grade B assets. Now for that, I would like you to just pause here and see the headlines here, where a lot of deals are in this segment, 1 lakh square feet and above, which is what REITs offer and tenants want to take, with larger landlords and tenants in the play. And secondly, you can also pause here in the second one and understand how the office stock in REITs in India is in the various classes in the office space, grade A, grade B, and so on. So rents can become lower, then the values can be lower also, but then REITs keep holding properties. Let's just assume that rents become lower and consequently the valuations happen for underlying real estate, and but the fact is that the REITs would keep holding property. Then how would the value of REITs become zero? How would they go bankrupt? Now let's not forget that there is debt in REITs. Now, the debt has two components, obviously, the interest payments and the fact that you have to either repay, but most REITs work with the refinancing of the loans. That's how the loans are generally rolled over. So in case there are very adverse scenarios and the total cash flows are hampered and loans or rents cannot be paid, then what happens is that they have to sell off properties to repay debt, and the balance then is paid out to the investor. That's what happen in a very, very adverse scenario. But let's now compare the situation in India and the world now. So if you see, the US sentiments have in fact impacted India, but there is a lot of geographical and demographic difference. The size of the country and the demographics are totally different. The second thing is that the interest rates rise. In India, what do you estimate is going to happen to interest rates in future? And in US, at least, these interest rates have been unseen for a generation altogether. Now we have already had much more interest rates. The third is the SEZ policy issues. This is very specific to India, and you'll just see one fine day probably this gets solved. And the fourth is that this is also true. There is a lot of work from home shift happening, and there's hybrid working and whatever. So this is obviously subject to everybody's interpretation. But again, the infrastructure and demographics are very different in India. So going by all that, and then there is a major silver lining that the debt capping is at 49% for REITs by SEBI. And you can refer to an earlier video on SEBI legislation for this. So going by all that, what we feel is that technically it is possible that REITs can go bankrupt, but practically it seems like a very difficult scenario. And what should be your current strategy? What should you have? We have discussed this already in another video earlier. You can see this, look it up, and what you can do. But please pause on the next slide to summarize yourself or whatever was discussed in that in a very short way. This is what we had discussed. You can pause here and read through this. So, do you feel that REITs today are an opportunity? Are they trapped? Please do comment, write to us, and do connect with us on social media like WhatsApp or Telegram by visiting our website. Thank you so much.